stocks. If you're expecting a bunch of guru fluff and get-rich-quick garbage, you've come to the wrong place. This show is the no bullshit real deal.
No bullshit real deal.
I'm Larry Harbolt, and they call me the real deal. Welcome to my show. This show is aimed at providing you with quality information so you can make more profit in the fastest way possible without making costly mistakes from the deals you do.
Let's get started.
Hello, everyone. Today, I thought I'd talk about something that I recently had a conversation with another person about, and this person asked me if I invested in the stock market. I said I didn't, and the look on their face that I was talking to was just a look of amazement. They immediately responded saying that the stock market's at an all-time high, and they thought it was a perfect time to invest in stocks and ride the market up and up and up, because in their mind it was never going to stop going up. Does this bring back memories of 2008 to anyone? See, they couldn't understand why I wasn't interested in buying stocks when there was no way that you can lose, you can only win. That is incorrect. Years ago, my father had invested in the stock market. The stock market made a correction. And in his mind, he lost $100,000 overnight. To him, that was major. Like I've mentioned before, he went through the Great Depression where he almost starved to death. And so the loss of that $100,000 was major to him in his life, even though he still had more in the account than what he lost. But it was the fact that he lost money. And this market is going up and up and up. I see it every day hitting record highs. But I'm wondering, when will the return from those stocks get to a point where they don't keep up with the cost and there will be a sell-off? Eventually, it's got to happen. It happened in the real estate market in 2008. It's happened to the stock market several times. Now, the conversation that I had with this person, it was starting to scare me for the person I was talking to. So I decided I was going to try and change their mind and save them from themselves if I could. So this is what I told them: why stocks were not something I was interested in investing my hard-earned money in. Number one, the stock market is much too volatile at this time. I know it's going up, but I was told years ago, a fool buys at the top. A smart investor buys at the bottom and rides it up. So people getting in now who don't know anything about investing in the stock market, to me, they're playing a fool's game. See, when the returns to the investor is inadequate for the amount of money invested, people are going to sell their stock. It's that simple. They do it every day. And yes, the stock market is constantly going up almost every day. When stockholders' confidence goes down in the market, there's going to be a huge loss to many, many people. I fear it's coming. I hate to see people put everything they've got into a market they don't understand. See, most of the losses will be taken by those who buy at the top of the market. That will never be me. I'm smart enough. If I'm going to buy a stock, I'll wait till it tumbles, and then I'll buy at the bottom and ride it up again. To me, that makes more sense. But I do not invest in stocks. According to statistics, the stock market produces an average return annually of about 7%. And when my father lost a third of his portfolio value overnight, that was in 1987, I believe. That was a market that lost about 30%. Most of the stocks he invested in had significant losses. He lost $100,000 overnight. He didn't live long enough to recover from that. He never got all of his money back. So I've got a problem giving my hard-earned money to a company based on past performance. See, I don't have a crystal ball, and I can't see into the future. I don't personally know the CEO of the company that I might invest in. I don't know the workers, the people that create the products, the widgets for that company. So I can't be sure when the downturn is going to happen. And I just can't do it for a 7% return. Too much risk for me. It's just not something I want to do. See, to me, the smart stock market investors, they try to time the market before the downturn. They sell at the peak. They buy at the low point and ride it up again. Like I said, see, this is nothing I'm interested in. I'm too much of a control freak. I'll tell you that right now. Now, on the other hand, you see, the reason I don't invest in the stock market, but I invest in real estate is because I can take my hard-earned money and buy an unloved property. I can negotiate the price I pay. You can't do that with stock. I can decide the best way to make extra profit in my real estate deals. You can't with stock. I can decide the best time to sell or the best time to buy. That you can do with stock market. I can decide what amenities I put in my houses to get the higher price. The amenities I'm talking about, the colors, the kitchen cabinets, all of the nice things that will make my properties worth more. The color I paint or side any house is very important, but I have control over that. The color of the ceramic tile, the carpet, the flooring I use. You see, I can decide if I want to wholesale the property, rent the property long term, or sell at a retail price. You have to understand, I want to be in control, and I feel comfortable with my houses that I can make more than a 7% profit that is volatile, that could come tumbling down at any time. Now, I know those in the stock market will say I'm crazy, but it's my comfort level I'm worried about. I want you to at least think about it. You've got to stay within your comfort level, because I saw too many people lose money overnight when the stock market tumbled in 87. I don't want that to happen to you. At least putting your money into houses. People are always going to need a place to live. There's always going to be a need for the real estate. Stocks, that's a different story. Another thing, I can go and borrow money from a bank to buy my houses. You can't go to a bank or a lender and borrow money to buy stock. That doesn't happen in the real world. So I've got a distinct advantage with my houses. And I can make much more than a 7% profit. Now, that's depending on what I do with the properties. No, my friend, the stock market is much too risky for me. See, I can buy the well-selected real estate, and I can continue to pay lower taxes depending on what I do with the property. I have leverage. I can use other people's money to buy and fix my properties. Like I said, banks are not going to lend money to buy stock. So in my mind, I'm taking far less risk. Let other people pay for my houses from the rent that I receive is what I like. You see, those properties, if done correctly, bought correctly, and managed correctly, they don't cost me anything, because my tenants get up every day, go to work to earn the money to give me in the form of rent to pay for those properties. I like that better. And so I get lower tax treatment. Everything about the real estate I enjoy is because I feel I have less risk. Because if you buy properties like I do, the market means little, because I don't rely on bank financing. I rely on dealing with sellers and talking to them and creating deals. What I teach is timeless. You may not understand that, but it's timeless. It worked back in biblical days. It'll work 1,000 years from now, because it has nothing to do with the market conditions. As long as you can make a good deal with a seller to get something that someone else wants, you're always going to be able to make money with the real estate. So if you do it correctly, exponential growth of the wealth that you're trying to build is going to come regardless of the financial markets. Remember that. It's how you buy, it's how you manage, it's what you do with the properties that's going to be best for you. Just don't rely on institutional financing, because that comes in 7-year cycles. Sometimes it's up, sometimes it's down. There are times money is prevalent, if you can fog a mirror, you can get a loan. There are other times in real estate investors can't get a loan to save their life. And if you do get a loan with a bank, you may get 4, and then the bank is going to cut you off because you're too risky. You see, it's an investment. It could go south, but if you have a job, that's safe and secure. So I guess if I worked at 7-Eleven, I had W-2 income, I would be more borrowable than owning a bunch of real estate. See, it just doesn't make sense to me. So people don't need stocks to survive, but they do need houses to live in. Remember that. But they're going to always need a place to live, and that's where we come in. We can give them great places to live. I just wanted to mention why I don't invest in stock when the stock market's going crazy. I just feel safer with the houses that I buy that allow me to make the decisions, and I'm not relying on other people. And I want a house that I can fix up in the market that I'm in and not base my buying opinion on past records like in the stock market. When you do your research on stocks, it's all from past statistics. It's not about what is happening today or what's going to happen tomorrow. It's just too risky for me. So I wanted to go over this. I think it was something that I wanted to express. It's up to you how you invest your money. But I think I can grow my wealth a lot faster with real estate. Now that's going to wrap up this episode for today. I hope you found value from the topic today, and I invite you to head over to LarryHarbolt.com and register to keep up to date with more ideas and tips to help you become a better real estate investor. Now be sure and tell a friend and leave me a review on the podcast player that you're using to listen to me right now. Your reviews help me know what the information that I'm providing is valuable to you. So have a great week. See you next time. This is Larry Harbolt.
Thanks for listening to the Real Deal Podcast with Larry Harbolt. To learn more about investing in real estate, head on over to LarryHarbolt.com and register for his educational tips and articles delivered by email.